Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today on Follow the Money, we're diving into ASEAN's role as a growing investment destination amid global uncertainties and exploring the impact of geopolitics on the region's economic future. We'll also take a closer look at the Philippine equity market, from the ongoing Middle East conflict to the upcoming BSP policy meeting, and what this means for investors. And joining us to break it all down is James Cheo, Chief Investment Officer for Southeast Asia Global Private Banking and Wealth at HSBC. Welcome to Follow the Money, James.
Oh, thanks for having me with you.
Thank you for joining us. James, to start us off, let's look at ASEAN's positioning. With the global uncertainty still looming, where does ASEAN stand today as an investment destination, and what makes the region attractive compared to other emerging markets?
Yeah, I think if you take a step back and if you look at ASEAN as a whole, it's a big consumer market. It has a rising middle class. And over the last couple of years, ASEAN has benefited from that redirection or the rediversification of supply chains. But of course, the question is what's going to happen with the tariff situation, and whether will there be, more rejigging of supply chains that's going to occur. But I would say that, as things become more uncertain, there is a certain sense that ASEAN is coming closer together. Just a few weeks ago, ASEAN as a whole came together in Malaysia, in KL, where there was a KL declaration where, more corporations on economy, on trade and investment integration for the region. So I would say that ASEAN is still going to be a very important destination for investment. It's still going to be a very important destination for growth. And in some ways, investors cannot afford to kind of ignore the rise of ASEAN.
Do you see now strengthening of partnerships in the ASEAN region in terms of what's happening globally right now?
Yes, definitely. I think as the world becomes more uncertain, it's always good for ASEAN to come together to get a better kind of a negotiation. It's always stronger if ASEAN goes out together rather than going solo. So I think there are a lot of interesting dynamics that are playing out in ASEAN right now. And I think one very crucial element is that if trade and investments are much more integrated for ASEAN, it also means that if there is a fiscal policy expansion within ASEAN, the benefits would stay within ASEAN. So there's a factor that could perhaps make ASEAN closer together. You will see infrastructure that is going to benefit both and the entire ASEAN region. I think one example, of course, would be digital infrastructure. I think ASEAN can benefit together as a whole. And also, I think the region can be closer together, whether it's through more linkages, whether it's through sea, whether it's through air, or even through rail or roads. So I think ASEAN has a potential to come closer together, even as the world is now seemingly much more divided.
Now, when looking at that, the strengthening of partnerships in the ASEAN region, now, if we look into the Philippine equity market now, how do you see it moving for the rest of the week, given the ongoing conflict which is happening right now between Iran and Israel?
Yeah, well, I think if you think about it, I'll borrow the quote from FDR during the Great Depression, where he says, what you have to fear is fear itself. What he meant at the time was that, it's not so much economic growth that is the one to be afraid of, which is going to slow down at that time. But it's really the fear surrounding how much the economy is going to slow down or is going to have a kind of a bump. So in the same way, right now, we are bombarded daily with narratives from the news. Most of the time it's negative, whether it's from tariffs, whether it's geopolitical tension. And sometimes people are too fearful, and that fear kind of causes a paralysis of sorts. So I think there is importance for investors or business people to take a step back and look at the fundamentals and see where the fundamentals are. If you look at the United States economy, Despite all the headlines you read on the papers, the US economy is extremely resilient. The job market is still creating jobs. If you look at, for example, even in the various earnings report in the US, many of the tech companies are starting to, broaden out the earnings, and the whole AI revolution is creating and permeating through everyone's life. So I think there is a need to kind of take a step back, look at the fundamentals, and the world might not be as bad as what most people think if you just purely base on what you read on the news.
But do you still think that investors, whether those foreign investors looking in ASEAN and also here in the Philippines, are still a bit cautious?
Well, I think there are, of course, risks out there, but I think one trend that is fairly underappreciated is that whole flow of capital that's moving back into ASEAN. Because over the last many decades, what we have seen is that ASEAN Asian savers generally buy into the US market, whether it's the US dollar, whether it's US bonds or US equities. But of late, in the last few weeks and months, what we have seen is that re-diversification of capital flows back into the ASEAN markets, because capital is coming home in some ways. And this is, creating a certain strength in the ASEAN currencies, for example. And that's why, even despite the negative news that you see out there, ASEAN currency generally have actually become much stronger and not weaker, So the impact of capital flows cannot be underestimated, because many of the ASEAN markets are generally smaller, less liquid compared to global markets. And this flow of capital back to ASEAN can create an outsized positive impact. And if you think about it, the growth differential in ASEAN is still going to be stronger than many parts of the world. If you think about it, the interest rate differential in ASEAN is higher than many parts of the world. So there are opportunities for income in ASEAN. There's opportunities for growth in ASEAN. And I think that's why investors are bringing money back. And of course, it's not just domestic investors, but foreign investors are also kind of putting ASEAN on their radars as well.
Now, James, still looking at the current situation in the Middle East, do you think it will offset the potential impact of the widely expected 25 basis point rate cut by the Bangko Sentral ng Pilipinas tomorrow on the equity and bond markets?
Yeah, there are many calculations involved, and the thing about geopolitical risk is it's very hard for anyone to predict. An economist, it's hard, it's hard for an economist to predict. Neither are markets very good at predicting a geopolitical situation, because there's no way to know for sure how all these things will pan out. But what's for sure is that the Philippine Central Bank will look at the economic situation. If you see inflation is moving downwards, if you see growth, it's slowing slightly from the Q1 GDP data. So I think there is a case for tomorrow for that rate cut to proceed. And thereafter, I think it's again very much depending on how the data pans out.
That being said, do you believe it's the right time to invest in the equity market before the BSP announces its policy decision?
For me, I advocate a globally diversified portfolio, and I think in that sense, it's about allocation to markets that are less correlated to the rest of the world. I think Philippines has those characteristics, very much domestically oriented, very much has its own growth structural factors such as a rising middle class, and also the service export sector is resilient when it comes to tariff on goods. So there are characteristics of the Philippines economy and many of the companies that are geared towards its growth factors that are a bit different from the rest of the world. So I think there is a case to add Philippines as a diversifier. And I think that's going to be a very interesting kind of an asset class, together with ASEAN, not just for today, tomorrow, but for the years ahead.
Looks promising, but do you think the Philippine Stock Exchange Index will reach the 7,000 level given the current global situation that's happening?
Yeah, there are many things that are happening at the same time. I think the support, I would say, would be valuations. That the support will be that whole growth story that I talk about. The support will be that earnings growth. But of course, there are headwinds, and clearly the headwinds can come from anywhere, whether it's geopolitics, tariffs, uncertainties associated with capital flows, many things. So I would say at this point, we might be in a range-bound market with quite a bit of volatility, but I think over the long term, I think the prospect still looks brighter.
Now, James, focusing on the Philippines, what sectors do you think are currently drawing investor interest, and are there any industries that you believe are on the verge of a major breakout?
Yeah, I would say that, you want to look at, sectors that are geared towards the domestic economy that will benefit from consumers spending more, they will benefit from falling inflation, that will benefit from more infrastructure build out. So these are the sectors that I think will do well. So consumers, whether it's staples or even infrastructure, companies that are associated with infrastructure, I think those are the companies that could actually be fairly resilient in the years and months ahead.
If we look at consumer and digital trends, James, how important is the rise of the Filipino middle class and the rapid digitalization of the economy in shaping new investment opportunities? Are we moving fast enough to compete regionally and globally?
I think the domestic market in Philippines, it's large enough, and there are many ways in which this digital economy could broaden out and permeate and make things more efficient. Payments, I think, is one area that have seen intense improvements, and of course, improvements always come about with competition. So I think those are areas that things are improving, and of course it will broaden out to e-commerce, ride-hailing, and also in terms of financial services, more and more demand for the rising middle class will be they want to make transactions as easy as possible, everything from their mobile phones. So that trend I think will continue on, and I think Philippines with a large consumer market, digital economy is going to be one that's very important, and I think along the way the competition of course will be intense, and competition in some ways will be good because it will also force innovation, and clearly the platforms that perhaps would embrace AI to make their processes much more efficient, more productive, perhaps would gain that edge.
Now, looking at the markets from your vantage point at HSBC, are global investors now showing more interest in Philippine assets such as equities, bonds, real estate? What's attracting them? And on the other side, what's keeping them cautious as well?
Yeah, I would say the first trend would be that whole flow of capital back to Philippines. So that recent, I would say that whole appreciation of the Filipino peso, I think is catching some attention. But make no mistake, recently the peso pared back some gains. So investors are watching and looking at this space in some ways. And if you look at the growth differential, Philippines' growth is going to be one of the fastest, if not the fastest in ASEAN, and clearly one of the more stellar performance in Asia. So on the growth differential, Philippines will be there. So that will permeate into companies' earnings growth. And also at the same time, if you look at interest rate differential, Philippines' interest rates are higher than the United States, and also higher than most parts of ASEAN. So capital flows for two reasons, one for income, the other for growth. And I think Philippines fit that that objective quite well. But again, I think people are still taking a step back, looking at how things will develop. But over the long term, I think those two factors, growth and income, will always be a very important factor that would drive investments into Philippines.
Yeah. That looks great. But James, looking at sustainable investing, many investors today are looking beyond just profits and are considering what's called ESG, environmental, social, and governance factors. In simple terms, it's about how sustainable, ethical, and well-governed a company or a country is. Now, how important has ESG become in ASEAN's investment strategy, and are we seeing meaningful capital flows into ESG-related projects, especially here in the Philippines?
Yeah, ESG, I think, is an important aspect, really, because, most of the time, people always look at investing just at the financials, whether the company is the most profitable, and, matrices that are built around quantitative, profitability, whether it's return on equity, return on investments. So there is a need to kind of look at it not just on the quantitative factor, but also to incorporate ESG into the investing process. I think this is very important because if you look through the long run, companies that are the leaders in environmental, social, and governance factor usually are better run, better managed. And typically, because of that qualitative aspects to it, they tend to deliver stronger profitability. It's a chicken and egg issue where, better governance, happy employees, better community usually leads to higher profitability.
A lot of factors to look into, yeah.
Yeah, you might not see in the short term, but I think the long term, it does play out in the data.
Now, if we look at some hidden risks, what are some of the lesser known risks or challenges investors should consider when entering ASEAN or the Philippine market, and how can they be managed wisely?
Yeah, well, the traditional risks that ASEAN faces is essentially capital flows, because most of the time when the dollar strengthens, ASEAN will underperform regardless of the strong growth dynamics within ASEAN. So this is a risk if we do get capital flowing out of ASEAN back into the United States again. I think that would be a risk. But as of now, I think that capital looks a little bit stickier because of that strong growth differential I talk about, because of that interest rate differential that ASEAN possesses, and also a certain diversification away from the US dollar assets. So those factors bodes well for ASEAN, but clearly that could be a risk. But again, risk can come from anywhere. There are known risk or there are unknown. So I would say investors, again, take a step back, not focus so much on what could go wrong, but I think to look at the fundamentals and ask themselves what could go right, and make long-term decisions on how they can allocate their assets to capture long-term growth in the years ahead.
Next, I'd like to discuss James, strategic timing. But before that, we're just getting started. Follow the Money returns after a short break. You're still with us on Follow the Money. We're shifting gears to investment insights with James Cheo, Chief Investment Officer for Southeast Asia at HSBC. We are to explore ASEAN's position as an investment destination amid global uncertainties, the impact of geopolitics, and the outlook for the Philippine equity market, including the conflict in the Middle East and the upcoming BSP policy decision could affect markets. Plus, we are diving into Philippine investments potential, consumer trends, ESG investing, and what global investors are watching closely. We're still with James Cheo. James, before the break, I was going to ask you some of these strategic timings. Now, if an investor today approached you and asked, is this the right time to invest in the Philippines? How would you answer that? And what key signals do you think or data would you point them to?
Yeah, I think investors right now, most of the time, a lot of them are afraid. So they hold too much in cash. And I think there is a case to, take some risks out there, at least go into bonds. Because why I would say that is because currently bonds are at a point in the US, 10-year treasury is at 4.5%. And that's very good yield to get from a risk-free basis. From Philippines' point of view, your policy rate is 5.5%. So investing from a bonds portfolio, you do get a very good income. And that is only just the interest or the coupons from it. And the power of bonds is that if you do get a rate cutting cycle, and we should get a rate cutting cycle as the year proceeds, the value of bonds does go up. So that, gives almost, you have a bond that is very safe, but yet you can get almost equity-like returns for bonds, which is quite compelling. And the second point is that if you do get a big sell-off in risk assets, and we will get all these bouts of volatility from time to time, what investing in bonds does for you is to give you that optionality. Because if you are deployed into bonds, if you do get a big sell-off in equities, maybe it could be recession risk, it could be a lot of risk factors. What happens during those times is that bond prices typically go up. And then what one should do is to kind of use that optionality or use that increased value of its bonds to reallocate into the assets that were sold off, such as equities, and to build through that process a globally diversified portfolio of both bonds, equities, as well as other, hedges such as gold or even commodities. So I think that's the approach that one should do at the minimum, because, sitting in cash, deposit rates are just going to fall. The value of the cash doesn't change. But if you do invest in bonds, it gives you that optionality. You get paid to wait, and getting 5.5%. It's actually very, very significant in the whole scheme of things in building up a portfolio. And it should be a important building block for
James,
most investors.
as you look at the local market here in the Philippines, with the investors, the types of investing, how do you see it? Are investors a bit more risky? What kind of risk appetite do you see in the local investment atmosphere here in the Philippines?
Yeah, well, I think it's a spectrum, and it's hard to kind of generalize at this point of time. But I would say that there will be investors that are sitting on the sidelines. They are waiting for, if there are any big pullbacks, and then that's where they would come in. So I think a lot of people on a wait and see mode, sitting on the sidelines to see how things develop. That's generally one segment of investors. But also there are another group of investors who are actually, slowly looking for income, looking for that, fixed assets or fixed income investing that I talked about earlier, deploying that cash. So we've seen that activity as well with investors, moving out of cash, putting to fixed income, and then paying to wait in case, things pull back. And that's where they will increase allocation to the riskier assets. I would say it's a spectrum.
As you mentioned a while ago, you were saying that it's, correct me if I'm wrong, that looking at long-term assets like bonds would be the best way to go in less riskier investment. Is that what you see right now? What types of investments are you seeing right now that the local Filipinos are investing in? More on long-term, less riskier bonds, or more on the a bit riskier side on the equities?
Yeah, it is a spectrum. I think a lot of it's a mix. So there will be a segment of investors who are totally sitting on cash and sitting at the sidelines waiting to kind of deploy their capital in case there's a big pullback. And there are those who are already starting to deploy in fixed income so that they could benefit from the income that they can get. And also opportunistically, they are buying into some of the companies related to consumption, related to infrastructure, to benefit from the structural growth opportunities. And of course, there are those investors who are already invested a lot into equity markets that are, at this point, it's okay, but of course, there's quite a bit of a risk there if they're too overly allocated. And for those investors, they are, a bit worried. They are paring down some of their exposure and going into fixed income.
And as a final insight, James, if you could leave our viewers, whether they're business owners, entrepreneurs, or aspiring investors, with one powerful insight about the future of investing in Southeast Asia, what would it be?
Yeah, I would say that don't ignore the new AI. And that new AI is not artificial intelligence, it's ASEAN and India, and it's a very important kind of allocation to a globally diversified portfolio, because ASEAN and India would have very different growth dynamics compared to the rest of the world.
Okay, on that note, thank you very much, James, for joining us today and giving us your insights on the market and where to invest, whether it's high risk or more long-term, less risky bonds. So thank you for your insights.
Thank you. Thanks for having me.
That was James Cheo, Chief Investment Officer for Southeast Asia at HSBC. And thank you for sharing your expert insights on ASEAN's position in today's global investment landscape, your perspectives on the impact of geopolitics, the Philippine equity market, and the influence of the Middle East conflict provide a clearer picture for investors navigating uncertain times. We appreciate your thoughts on BSP policy impacts, sector opportunities, and the Philippines' ESG investing. and what global investors are watching closely.
Thank you.
And before we go, here's a fitting quote in the face of geopolitical and economic upheaval from Nobel Prize-winning economist Paul Romer. A crisis is a terrible thing to waste. And that's it for today's edition of Follow the Money. I'm Robert Tan. Thanks for watching. Keep it here on BNC, the Bilyonaryo News Channel.